Open your cerebral cortex and shift your lobes into upper beta phase because you are going to have Bitcoin knowledge transmitted directly into your vestibulocochlear. Your host at Bitcoin Knowledge is Trace Mayer, an early Bitcoin advocate since it cost $0.25, but this is not intended to be investment advice. A doctor of jurisprudence, but this is definitely not legal advice. And an investor in core cryptocurrency infrastructure, including Armory, BitPay, Kraken, and Mitagio, but this is not a recommendation of those services. Here, you get fed via direct mind download with pure and free Bitcoin knowledge.
That's interesting. Google chose to show your face instead of the intro, which is perfect, actually. Like a live thumbnail. So welcome, everybody, to the show. I am so excited. I really can't even express it to have Trace here again on the show. So Trace was last back on in March, and Trace is somebody I've respected in the space since before I had this channel, when I was early doing my research and diligence into Bitcoin. And I must say, the way that Trace was talking about Bitcoin was probably the most intriguing and fascinating to me, besides probably Andreas Antonopoulos at the time. Totally reinvigorated my spirit and gave it more fuel to the fire. And he continues to do that to this very day. So last time we spoke with Trace, we were beginning the cold bear market, the long winter that Trace was calling back in March. And wow, lo and behold, yeah, it's freezing right now. Here we are in the thick of it. So we need to get updates from the man himself. Many of you have been requesting him. He's probably my most requested guest. And so, luckily, Trace was able to get back to me within 10 minutes when I asked him for an interview today. So we're going to do it with you guys. Welcome, Trace, to the show.
Oh, thanks so much for being with you. You know, I've loved watching your progression in this whole space, like building your channel out, like your audience, having people that talk about all of this. Like, to me, it's just really exciting. You know, I remember when we had kind of a little political hubbub in the Bitcoin community, and I talked with Andreas about it, and that like got Andreas to start publicly talking about Bitcoin, and like, look where he is now. You know, he's like, really? Awesome.
So yeah, inspired him to start talking about Bitcoin.
Yeah, we had a little issue involving Roger Ver of all people and someone else, and I was actually on Roger Ver's side at the time. So it's interesting how things move around. But yeah, Andreas was vehement about it, that he actually like got into the middle of the ring, kind of like you've done and like I've done, and you know, and it's a lot of fun. So yeah, I mean, it's great. And Andreas is kind of the you know, he succinctly captured like, not your keys, not your Bitcoin. And so, you know, that's going to be a little bit of our discussion today, right?
Yeah, actually, yeah, we can jump into that right away before everything else I'd love to ask you about, and I'm sure people are interested in hearing about. So, I mean, what do you mean about private key importance? What are you talking about? I hear there's something happening on January 3rd, Trace.
Yeah, so I decided to break out the little banner and like beat the drum a little bit, and like, let's see who's going to show up for this fight on January 3rd.
A fight?
Oh yeah, this is a fight over your monetary sovereignty. Are you some 14-year-old kid whose parents like dangle the keys to the car over your head, like making you jump through hoops, like you can only withdraw $1,000 a day out of your Coinbase account or whatever it is? Or do you have control over your money? And we've had a lot of people come into the Bitcoin space over the last year, and you know, they haven't been around. They don't know like Mt. Gox, like maybe they've heard of it. There've been like 50 exchanges that have failed. Over 1 million Bitcoins have been lost, you know, because people have kept Bitcoins on trusted third parties that shouldn't have been trusted. And so, you know, people kind of need to understand the importance of proof of keys and proof of work. And so why not do it on the Genesis block day? Why not turn this into an annual celebration that we can do as a community and just demand proof of the keys? You know, just, hey, you got any Bitcoins anywhere, whether it's an exchange, whether it's a gambling website, like wherever you're keeping a balance, just withdraw all the Bitcoin from all the services. You know, it's a pretty simple concept. And you can always send them back, but just prove that they've got them. That's supposed to be our credo, right? Like, don't trust, verify. Like,
so you're talking about getting all of our money off of an exchange on one date,
yeah.
off of everything, whatever we can, I assume, with withdrawal limits, right?
Oh, well, hey, you're going to learn a very important lesson if you go to withdraw some of your money and there's a withdrawal limit. And what's the first thing that banks and other financial institutions that aren't credible do? They lower your withdrawal limits. We saw it in Greece. You went from being able to withdraw 1,000 euros a day to being able to withdraw 50 euros a day. No, I mean, like, this is a big deal. Like, it's all like when it's sunshiny and nice, like that's a great time to go withdraw your 1,000 euros. But like, if it's a crypto winter and people don't really have the Bitcoins or whatever it is, like, you're going to find out real quick, and you might as well be at the front of the line. Like, why be in the middle of the line or the back of the line? And you want to have the technical competence to be able to do this. So you can think of it kind of like a combat readiness drill.
So some people might lose money but because of this, right? Unless they're combat ready.
Well, if let's assume that there's an exchange out there and a large enough portion of their users decide that they want proof of the keys, because these are unregulated exchanges. Like, Tether doesn't have an audit that's been performed. Like, when was the last time a large Bitcoin exchange had an audit and published it? Would the auditors even be able to know, like, how to properly audit Bitcoins? I mean, we don't even know. And so, like, just prove it. Send the Bitcoins on the blockchain. It's really simple. Like, it doesn't have to be difficult. And it's really easy to run software, run Bitcoin Core, encrypt your wallet.dat, make backups several places. Like, you're good to go. And you can always send the Bitcoins back after they've proven that they've had them because they've sent them to you. So this is just a little bit of the impetus, is get yourself combat ready, so that if there were to be any type of a catastrophe in the ecosystem, that you're prepared to take possession of the Bitcoins yourself.
Do you think that there would be some sort of issue, or maybe we'll see which exchanges have issues when it comes to withdrawing, because all of this is going to have to happen on the blockchain, I assume. And I mean, we're limited to 2.3 transactions about on the Bitcoin network. And so some withdrawals probably would take a while if they're even processed by exchanges who might, try to do like the banks did and stop withdrawals for a period of time. Do you think that we can actually get enough support for this? I mean, I'm all about it, man. So on January 3rd, withdrawing all of the crypto pretty much that we have on exchanges, at least the Bitcoin, and putting that in our own possession for a period of time. Is that pretty much it?
Yeah, well, and I don't think you should limit it just to Bitcoin. I would say withdraw all of your crypto. Figure out whether you can actually hold this stuff or not. It's a good exercise to go through. Have you read the lawsuit with Michael Turpin and AT&T? He kept $25 million of these altcoins on exchanges, right? And lost it.
On his phone, right? And they hacked the SIM card engineering wise, and now he's suing them for basically 10 times that amount to get that money back.
Yeah,
but he lost it by keeping it on his phone.
Yeah, and it's kind of his own fault. And even if he wins the lawsuit, like, who knows what price they're going to value everything at and how long it's going to take. I mean, people still haven't got their Mt. Gox coins, and it's been like how many years? And so, it should be I think it's a great crypto-wide event. Because not only is it about the keys, holding the keys to the money yourself, but it's also about performing network consensus. And what I mean by that is running a full node, like not relying on somebody else's node. Because back with Node 2x, we saw that BitPay surreptitiously wanted to put in different node consensus software. So you might have some coin on an exchange, but if they decide to run a different consensus software, all of a sudden your coin just got changed in its name or in its fork or whatever. And now you got a totally different thing that may or may not be worth the same amount. And so, like, by doing the actual network consensus yourself, one, you're going to get some technological literacy. You need to know how to attach emails. I mean, come on. Bitcoin's been around 10 years. You need to figure out how to do some of this basic stuff. But by performing that network consensus and demanding possession of the keys from organizations and institutions out there, not just exchanges, gambling websites, like anywhere you got coins, you're forcing an economic network consensus mechanism to happen, and that strengthens whatever blockchain it's happening on. So hey, let's spin up a bunch of Ethereum full nodes if you can. Spin up a bunch of full nodes of Bitcoin Cash or Dogecoin or Litecoin, like whatever altcoin it is that you have, like do some full network consensus, strengthen that blockchain. I mean, you own the coin, you might as well strengthen it. I mean, you bought it for a reason, right?
Yeah, well, I'm all about it. And you said you made a website as well where people can learn more?
Oh, yeah. So it's proofofkeys.com. So pretty simple. You just prove you got the keys instead of being a third-class Bitcoin citizen where someone else is holding your keys and doing the network consensus. I mean, what we've learned throughout a lot of Bitcoin history, and a lot of people have these battle scars, is that if you're not holding your own keys and not doing your own network consensus, you're eventually going to get wrecked really bad. And so, now's the time to do it. You're not under a time constraint. You're not under time pressure. You're not afraid of the exchange failing or anything like that. It's, for all intents and purposes, these exchanges have likely been doing a lot of hard work over the last year. Coinbase has been moving coins around, testing their new systems and processes, because we had a huge influx of new users. Let's test all of these systems and make sure that everything's working and ready to go, so that, hey, we might have another bull market coming around eventually. We hope so, right? And when that happens, we might have a lot more people coming into the space. And so you want to be able to be of usefulness and helpfulness to them also. And you have to have that technological literacy in order to be able to do it.
Yeah, absolutely. Unfortunately, it's maybe not as easy to run a node right now as we might want for the mainstream, and that's perhaps why we see a lot of centralization of people outsourcing what they should be doing themselves over to third parties and exchanges, and keeping their funds on Coinbase or whatever, instead of learning how to run a full node, which is pretty difficult, right? I mean, on Ethereum, it's 1 terabyte to download the whole blockchain. On Bitcoin, I don't know, multiples of that. No.
Well, no, I mean, Ethereum's good luck doing it with that, right? But Bitcoin Core, go to bitcoincore.org. It's 160 gigabytes last I checked. It's actually pretty simple. You can download the software, you launch it, now it's running. You let it sync. It takes about the 160 gigabytes, maybe a couple days. And then you're able to encrypt the wallet and then make backups of the wallet.dat, and the passphrase. I mean, we're talking, this should not take you very long, 20, 30 minutes.
And what do you think about light clients? Or do you have any good software for that? Do you support that at all?
Well, the light clients aren't doing the network consensus fully. Right? So you're not getting that proof of work. This is about proof of keys and proof of work. And that proof of work, you need to validate it all with software you control. That way you're not going to rely on somebody saying, oh, your Bitcoin, it's actually the real Bitcoin, which is this Bitcoin SV or whatever, right? It's no. I want the real Bitcoin. I want the one worth $3,500, not the one worth $80. And that's what you're at risk when you're not doing your own network consensus. Is somebody else defining what the Bitcoin is for you.
Yeah, absolutely. You should be finding doing your research on what homework as well, and downloading the full blockchain so you're validating the transactions yourself. I totally agree. And you know what? I want to flip around here, Trace. What's going on? We had this huge winter. You kind of called it back in March. You said kind of strap in. It's a time when people got weeded out. And over this past week, how many companies were announced as laying off employees? Consensus, Spank Chain. We just heard Bitmain Tech Israel closed down yesterday. It's happening. So what do you think about this winter? What kind of players are being weeded out? Who do you think is going to be left? And how much longer do you think this winter is going to last?
Well, yeah, how long it'll last, I mean, nobody knows, right? Who's got the crystal ball? The previous one was 1,100 days. We're 380 days into this one. So it's been pretty decent, pretty decent winter. But there's a lot of big institutional money starting to move in. I actually got an email from one of my colleagues in the space. They had 100,000 Bitcoins that they wanted to sell, see if I knew someone who might want to buy them. I contacted somebody that was a legitimate buyer. There are not very many of those, right? Like almost $500 million. And I got back to him 3 days later. The 100,000 Bitcoin had all moved within 3 days. Like, I mean, that's some serious OTC volume. And yeah, so I mean, how long it's going to last? What we're seeing is a changing of the guard. And you know, I did an interview with Max Wright and G. Edward Griffin kind of in the middle of the previous winter. And in there, they asked me, oh, well, how low could it go? And I was like, oh, it might go to like $300. But if something really bad happened, like Mt. Gox failing, maybe it would go to like 200. Well, it went to like 182 because Mt. Gox failed. And I think a lot of people don't fully understand some of the mechanics. Like these exchanges, if they're getting hacked or losing their Bitcoins or they're running at a loss or whatever, it gets very, very tempting to dip into the customer assets because they've got control of them and they don't have to do audits and they don't have to like prove their reserves and they don't have to prove the keys that they hold or any of that stuff. And so like they get themselves behind, because then the Bitcoin price starts running, but they can't make the earnings like to recover those balances. Bitfinex, I guess, sort of did it with the 72 million that they lost, but I wouldn't bank on it, and I definitely wouldn't trust these exchanges with that. And so as the bear market continues to grind away and companies that aren't cash flow positive and profitable, as they're burning through their treasury balances, making payroll and stuff like that, I think we're going to see more belt tightening. You mentioned Consensus. They laid off 13% of their staff. Bitmain's supposed to be a giant in the space, right? Like, why'd they close down an office with just like 25 employees in it when they got 2,500 employees? Well, because if this price like hangs around $3,000 a Bitcoin for another 6 months or so, it might exterminate a whole host of these companies. Which I think would actually be kind of a good thing, because then we reallocate the capital, shift the assets around to stronger hands, and then it builds a solid foundation going forward. But it can be very, very tough on the companies that are there. And if any of them are being custodians, there's just this huge temptation to dip into customer assets in order to save the business just this once. And man, it's I don't want to play in games with my money. I don't want to make them payroll with my money. Otherwise, I would have invested in their company.
Yeah. And we're definitely seeing trouble that they're going to have raising funds. I mean, their IPO looks like it's in a little bit of trouble, specifically Bitmain. So maybe they reached peak Bitmain right now. And if this bear market continues much longer, who knows how much more downsizing we'll see, even across some of these big companies. It's definitely a reorganization of the whole space in some sort of ways. And you're going to see maybe new players come out on top. It's like our own internal wealth transfer.
Oh, yeah. And it happened last time. Like KNC Miner literally declared bankruptcy. And then like 2 to 3 weeks later is when the Bitcoin market turned.
Oh man.
so the market has a way of just wringing out every last Satoshi in a most painful way possible, moving them to strong hands. And then after, all the carnage and all the layoffs and everything, then the market can turn. We need mass capitulation. And, hodlers of last resort, guess what? They're trading on Ledger X and they're selling covered calls at like 50,000 strike prices for December. And so they're hodling more Bitcoins during the winter.
Oh, man, I totally want to get into that. I mean, I was watching your interview on Portfolio Wealth Global and you're talking about how you're using, options now on Ledger X. And maybe this is one of the ways to protect your Bitcoin. And so, maybe that is one of the better ways. You want to explain real quickly? And I apologize, guys. It looks like YouTube is having stream issues. I'm hearing all across the chat, all live streams happening across YouTube today. People seem to be getting like rewinds and issues. Lowering the resolution might help, I'm seeing, for some people out here. But it's not really on our end. It seems to be YouTube's issue right now. And hopefully when they actually encode this stream later on, you'll be able to watch it just fine. That's the hope. But try lowering the resolution. So Trace, what are options? What is Ledger LedgerX doing? And why might that be a good way to go long Bitcoin?
Yeah, so LedgerX is a swap execution facility and a derivatives clearing organization. They're regulated by the CFTC. They trade fully collateralized Bitcoin derivatives. So you have a next day swap, and then you can also trade puts and calls of varying strike prices. And I mean, this is where the big boys trade. You have to have a minimum of like $10 million to be an ECP, to have an account on there. And, this is designed for institutions. And I mean, that's what's happening. Like Bakkt, Eris Exchange, Fidelity, Nasdaq, like all the big boys are launching these. LedgerX is the first one, but these big boys are going to be launching very similar products. And so we're going to be able to see that this derivative pricing, and what it does is it helps cement the SIX network effect of financialization. And then also settlement currency, because now you've got the ultimate collateral. You've got Bitcoin as the collateral that's strictly limited in amount that you can sell very high out of the money strikes and collect premium. And so hodlers of last resort can just keep acquiring more Bitcoin.
So it's pretty much like the option to buy or sell at a certain price in a future date, right? So
yeah.
Like you were saying, maybe the $5,000 Bitcoin 2020 level was interesting. So basically, I would have the option to buy Bitcoin at $5,000 at the year 2020. Is that pretty much what it is?
Yeah. So you got different elements of the contract. One's the strike price, so $5,000. Then whether it's a call or a put. So a call is the right to buy it. A put is the right to sell it. Like you wreck your car, you want to put it to the insurance company at the value it was before you wrecked it. And then you've got the date of expiration. So usually these expire at the end of month, they've got contracts all the way out till June of 2020. So like I actually got some June 2020 5K call options. So I have the right to buy Bitcoin for $5,000 in June of 2020. And you're able to, you don't tie up nearly as much capital. You want to buy a whole Bitcoin, it's $3,300. But if you want to buy one of these call options, it might be like $1,000, for a June. And that's almost a year and a half out after the halvening, right? And so it's a way that you can use less capital to have greater upside, or maybe you can protect your gains by buying puts, or you can buy Bitcoin at a cheaper price by selling a put. So then you get the premium. And say you sold a 3,000 Bitcoin put and you got $300 of commission, then you're effectively acquiring the Bitcoin for $2,700. So if you've got lots of US dollars sitting around and you don't necessarily want to buy Bitcoin, you can actually earn yield on those dollars by selling the puts if you're happy to get the Bitcoins. And the premiums are, because of the volatility, the premiums are about 40 to 50% annualized.
Wow. So it's a really great way to stack up your Bitcoin. You think it's better than margin long or anything like that, of course.
Well, yeah. Why I like it as opposed to like margin is that you're trading fully collateralized. So one is, assuming that the CFTC audits are all accurate and everything, then they have all the dollars and they have all the Bitcoins. And the CFTC is in there like a roto-rooter, giving them a colonoscopy on a regular basis. I was there, and I think there were like 9 people from the CFTC doing an audit. And I'm like, oh, well, that gives me some assurance. It's not just some ragtag like Binance operation, right? Or like Tether operation. But, since they're fully collateralized, you know exactly how much risk you're taking on. Because the worst that could happen is you sell your Bitcoin at a certain price, or you buy Bitcoin at a certain price, depending on if you bought or sold the call, right?
And does there still have to be somebody on the opposite side of that trade? Like, is somebody really going to be betting against 5K Bitcoin in 2020?
Oh yeah, actually, the reason I bought the call options was because there's an electronic pit. So it's kind of like open outcry where you're like, hey, I want to do this, or I want to sell that, or whatever. And he actually wanted to sell 5K Bitcoin in June 2020. And so I was like, well, how much are you charging for that? And we kind of came to an agreement on a price. And I was like, yeah, like I'll buy them. Like, why not? Right. I have these dollars that I got from selling people the right to buy Bitcoin in December for $50,000 strike. They're going to expire worthless. So, might as well take that premium and try to acquire more Bitcoin with it. And I guess I'll be a little speculative. I mean, it's fun, right? And I mean, a lot of people, yeah, I'm a hodler of last resort, but I think it's fine to carve off a little bit of Bitcoin here and like trade with it. You need to have your solid position that you'll never move out of ever, period. And then, you can play based on what the Mayer multiple does. Bitcoin's at 0.52 on the Mayer multiple.
What is this Mayer multiple?
Well, that's where you take the current price divided by the 200-day moving average, and it gives you a multiple, right? And 98% of the time, it's higher than 0.52. So just if Bitcoin corrects back to normal of like a 1.0, you're looking at $6,500 Bitcoin, which would put those 5K strikes $1,500 into the money, right? So like, and when it's really high, like when it's 3.7x, like it was in December, guess what? Somebody sold the 50,000 December strikes. So 1 year out, they sold them for $3,600 a Bitcoin.
That's insane, man.
Right? Because the volatility was so high. I mean, those are going to expire worthless. But yeah. I mean, it was a $990,000 trade in terms of option premium because there were 275 50K strike options at $3,600 a piece. And go ahead.
Oh, so this helps you kind of stay sober in a kind of way, keep your head on. How do you do it, Trace? Because people were buying these options because everyone was so bullish. New paradigm. It's going to continue to soak all the money out of the world. Max Kaiser was saying this. Be a black hole once we get the institutions come the end of this year. And then
I coined the black hole phrase, but no, I mean, like. So here's the deal. The world is rethinking what money is. It's dollars, it's gold, or maybe it's this Bitcoin thing, or maybe it'll be something else. With these options, people could actually both win in the transaction, depending on the lens that they're looking through. Maybe you're looking through a dollar lens. Maybe you're looking through a Bitcoin lens. Because think about it. You've got whoever sold those 50K strike options, they had to lock up 275 Bitcoin. And it was like $15,000 a piece. Well, that's gone from $15,000 to $3,000. And so that $3,600 option premium, doesn't necessarily look so good measured in dollars. But if they took that $990,000 and bought Bitcoin, now they've acquired almost the entire amount of Bitcoin that they put at stake. So they're up 100% in Bitcoin without risking losing their Bitcoin position and less getting called out at 50K. Meanwhile, Ari Paul, who bought the call options, he actually said that he sold Bitcoin in order to buy them. So in terms of dollars, even though his options are going to expire worthless, he's still very profitable on the trade, measured in dollars. So this is a very difficult situation we're in, because if you don't have any Bitcoin, like you could get, Bitcoin can move like that, right? It can move really fast. That's why you have to have a hodl of last resort position. But then, you want to be able to trade a little bit when the Mayer multiple gets very outside of standard deviations, showing that Bitcoin is expensive or cheap relative to past performance. And that then you might be like, you know what, maybe I'll sell the Bitcoin at 15K, buy the strikes, to hedge that upside risk, but lock in the gain, but not do it in a way that you're going to get margin called. Because that's what you don't want to get margin called. Because these exchanges, they just seem to have a lot of fun margin calling people and just yoinking all their money, right?
Yeah, it's a little bit more difficult to manipulate, I would assume, for sure.
Yeah, since they're fully collateralized, you're not dealing with a lot of risk of settlement. Like, look at OKX. They've got like this insurance fund, but sometimes they honor it or don't honor it, and sometimes the trade actually pays out the way it should, but other times it doesn't. when someone gets wrecked massively, right? Like there's none of that on LedgerX, and probably not going to be any of that on like Bakkt or Eris Exchange or these other ones that the CFTC is going to be regulating. And what we might see as a result of this, especially if big money is coming in and trading on these other exchanges, institutional money, like Harvard's endowment or Yale's endowment or pension funds or whatever, is price discovery might move from the Bitfinexes and the OKXs and the Binances of the world to these more trusted, regulated exchanges. Because Harvard endowment's not going to trade on Binance. Like, it's just not going to happen. And so, like, they're going to want to trade on a regulated exchange like this. And so if price discovery moves, these other exchanges, they could really be caught with their shorts not on, when the tide is.
Yeah, I mean, if we're going to get, if these institutions are going to be wanting to trade on these exchanges, right, and it's not going to be $100 billion, it'll be $1 trillion or more than that. I mean, why wouldn't that be where we get price discovery and perhaps some sort of Bloomberg terminal consensus on price eventually that everybody actually looks like, while the space matures into what you call the sixth network effect, right? Thanks, Zani, by the way, for the donation.
Yeah, I mean, and that's what we're talking about. Like, hey, this is just the natural process. I laid out these 7 network effects years ago. Like, it's just, we finally are, like, this is LedgerX, which has been around for a year, has been proof of concept for the CFTC and hasn't blown the financial system up yet worldwide, like the CEO of Interactive Brokers was squawking about when CME futures got launched, right? Like, so, like, why not approve more of these if there's demand from market participants? Except this time it's going to be the owners of New York Stock Exchange and ICE. I mean, these are the largest, deepest exchanges in the world that are going to be like trading Bitcoin derivatives. It's going to be interesting to see how, Bitfinex or Kraken or Coinbase or any of these guys are actually able to compete with them.
Yeah. I love, by the way, Trey, so you can dig into all the dirty, it's not just superficial. I mean, you've done some homework, you've done these options, you've studied what kind of effect these institutions will have. But I want to just zoom out a little bit for the people we might be losing. So what are these what are these network effects? Is this the last one? Institutions coming in? What do you mean by network effects?
Yeah, so the first is speculation. Satoshi put it elegantly, like, we're able to transfer value over a communications channel. You might want to get some just in case it catches on. It could become a self-fulfilling prophecy. Well, you start speculating on this magic internet money, thinking it might go from 5 cents when I started publicly talking about it to $5,000 or $20,000. Or
I got to change the title. It says $1.
$1, yeah. No, it is actually less than that. And then, and I was the first person to put out a $2.8 million price target on Bitcoin. First 7-figure price target. Why? And I laid out the case with offshore bank accounts. And Bitcoin, in a lot of ways, is far superior because you can prove you have the keys with Bitcoin. What recourse you got if, like, the shady Antigua bank or whatever, like, steals your money, So first is speculation. Second is merchants, and third is consumers. Merchants are going to accept Bitcoin because speculators have them. Consumers are going to use Bitcoin because merchants accept them. Credit cards are only good in like 55 countries. Overstock takes Bitcoin. They could ship to 200 countries with UPS. So, Amazon has just seeded entire countries and not even competed there. Bitcoin enables competition in this type of an area. Sure, we need advancements like Lightning Network for scalability, but hey, it's coming because Bitcoin is extensible. So fourth network effect is the miners or the security. You want to build on the most secure blockchain, and then developers, that are going to build out the extensibility. What blockchain are they going to work on? The one that's got the most network effects. Why? So that their code actually sees the light of day. And companies aren't trading options on Dogecoin. So all these network effects exponentially reinforce each other. And so then the sixth network effect is going to be financialization. That's where you intertwine the pipes with the legacy monetary system, with things like LedgerX, Bakkt, etc. And then seventh network effect, world reserve settlement currency. Because what are we talking about? We're talking about what is the risk-free asset? What's the asset with the lowest risk profile? Well, when you can hold the keys to yourself and you can perform your own network consensus and you can pay 10 cents to verify $100 million transaction with 100% accuracy, you don't have to melt gold bars down and recast them or assay them or anything like that. Bitcoin is equity based. It's nobody's liability. What's the risk-free asset? Oh, is it that US dollar thing that's not limited in amount and the supply is determined behind closed doors, and like this unaccountable, unelected organization like starts changing the cost of it with interest rates and everything? Oh, and they can just seize it at any time. Like, why would that be the risk-free asset? So the world's rethinking what is going to be the risk-free asset, what's going to be the world reserve settlement currency. And, Bitcoin's in the ring, and it's been around 10 years. Like, what's the next 10 years going to have for us? And so all these network effects help reinforce each other. And like backed in their press release, they talked about Starbucks and Microsoft being partners in this. Well, if let's say Fortnite wants to have Bitcoin flowing through it for microtransactions, and then Starbucks wants Bitcoin flowing through it to pay for coffee. Well, Microsoft and Starbucks, they're going to need to hedge the exchange rate volatility relative to the dollars. Well, guess where they're going to go to do that? Backed and LedgerX, and they're going to use these derivatives to do that because they're measuring in dollars, not in Bitcoins. And so meanwhile, the people who are measuring in Bitcoins, they can be selling the volatility. And acquiring more Bitcoins. And it could be win-win, kind of like we talked about with that 50,000K strike option. So, this is a very exciting time because we have so much financial innovation that's happening.
Yeah, absolutely. I mean, I can see it. But there are people who are also kind of hesitant to get into crypto. Obviously, there's a lot of fear happening right now, Trace. We have institutions coming. I mean, we're hearing about all these products, but everybody is at maximum fear, it seems like right now. I mean, like they seem like everyone's throwing in the towel. Capitulation is the new name of the game, all these layoffs. So, I mean, well, let's talk about some of the reasons Bitcoin might not work. Let's see. Well, there's a halvening coming up, and many people expect, by 2020, that'll boost the price up. But doesn't actually that lend the potential for the security of the network to go down, Trace? Because there'll be less incentive to mine. There'll be only 6.25 Bitcoins mined every single block, divvied up amongst the same amount of miners. That means that, I'm making less profit. I'm going to have to shut down. Is there potential that some other forces, maybe even a government, come out there, buy up all these miners everyone's selling, and take control of over 51% of the network? Or is there potential for maybe some player already in the game to do this? And what kind of effect would that have socially into the future on the perception of Bitcoin or the security of it?
Yeah, well, first, like 51% attack can't really do much damage if you're holding your own keys and doing your own network consensus. And the hash rate fluctuates as a normal part of the business cycle. We've seen, there's turning off lots of miners right now. BitMEX put out an article, they estimated like 1.6 million Antminer S9s have been turned off. Like, this is great. It weeds out the less healthy ones, financially healthy ones. We would be a lot more worried about this if we haven't had any halvenings. I remember when the first halvening happened, went from 50 to 25. We're all like, I hope this thing works. Some people even sold their Bitcoins before it, because they were worried about it. Then they had to reestablish their position. But by then, the price started running. So they didn't get quite as many Bitcoins because they got shook out, right? So, being a hodler of last resort, it takes it takes conviction, that's just what you're going to have to do. And a lot of people are like, oh, like if I had only heard about Bitcoin when it was $1 or $5 or $200, I would have bought it. Well, okay, maybe, but you probably would have sold it too, and if you really believed in it, you'd be buying it right now. You'd be looking at these low prices as a gift because you're able to acquire more Satoshis at a lower price. So, as a hodler of last resort, I love the bear markets because we're able to acquire Satoshis at a lower price. We're able to acquire equity in Bitcoin companies at a lower price. We're able to do mergers and acquisitions, and I mean it's a wonderful time for people who have strong hands and aren't forced sellers. I think there are a lot of hedge funds probably that are forced sellers because their LPs or whatnot are putting pressure on them, because they don't have that conviction. But hodlers of last resort, they got that conviction, and so they're in buying it when it's cheap.
Yeah, and the longer you're in this game, the more conviction you have. You also mentioned in that other interview something about, what was it, 30% drop in, was it an hour, 10 minutes?
Oh yeah, that I remember that. That was like March of 2013, I think it was. There was inadvertent hard fork that was caused from like a database issue bug or whatever that Mike Hearn, it was his first commit to Bitcoin, and Mike Hearn stomps off and like Bitcoin's going to crash. I sold all my Bitcoins and it was like, what, a couple $100.
That's
it's like
literally the day that I bought. I had just been following markets and I was like, something crazy just happened in Bitcoin. This is when I'm going to start buying. Mike Hearn had left for R3, which is the bank consortium working with Ripple now. And I was like, this is a great opportunity. Fear over nothing.
It's like, I'll buy your Bitcoins, Mike. But yeah, so his first commit and when when it happened, I mean, that shook confidence quite a bit. And it was like 30% down in 10 minutes, but it happened at like 3:00 in the morning or something, Western time. And it had already been patched and fixed by the time most people woke up. And it wasn't even a bump in the Bitcoin network, like everything just functioned as normal as it could after the patch got fixed and rolled out. And so, that's the volunteer fire department, right? Like that's the Bitcoin militia. Like something happens and all of a sudden all these text messages and phone calls start happening, and then people are swarming and they're like figuring out what the problem is and then the fix and how to roll it out. Like, what happens when Bank of America gets hacked? Like they try to hide it as long as possible, because it'll take 3 to 5% off their market cap when a security incident is disclosed.
Like those hotels, right?
Yeah, the hotels.
Yeah.
And so, one, they try to hide it. And even if they're able to hide it and it doesn't get disclosed, it still costs an average of $8 to $10 million.
Dude, they hid it for 5 years. That's insane. Starwood Hotel Groups, which owns like every hotel you've ever visited, probably at least at some point in that time, hacked for passports, licenses, flight information. Wow, man!
I wonder.
They hid it.
I wonder how many exchanges out there are hiding the fact that they've been hacked and they don't have proof of keys. You know what I mean? Like. Otherwise, they'd have to shut down and give people back a fraction of their money. Oh, we can just make it back if we're able to earn it, with commissions. It's like, man, like a second layer of gambling with other people's money. I mean, there's just so much of that's gone on in this space for so long. And, if we do this on an annual basis, we're able to help teach new people coming in what to do. We're able to stimulate the discussion. We're able to flex our muscles as hodlers of last resort.
Yeah. And okay, so one other thing, I had somebody hit me up on Twitter yesterday and they were freaked out. They're like, well, could Bitcoin go to zero? And I want to know what your response is. What would be the thing that could take it to zero? I had my answer. And I'll let you know after, which, I think Bitcoin can go to zero for you personally. But if you like capitulate and get out and get shooken out and wrung out of the market, personally for you, it's zero, right? And you'll probably miss the boat and then you'll get bitter about it, waiting for it to go backwards and try to buy. And you might miss it, which is why you kind of want to follow this stuff, daily or whatever you want to do. But what do you think could be the Achilles heel for Bitcoin?
Well, I mean, maybe extermination of the human race, right? Extinction, because then you wouldn't have anybody to subjectively value it. The problem is that as long as Bitcoin survives, it will have a value from somebody, And so it's very difficult to get it to go to zero. I mean, these blockchains are incredibly resilient. I mean, look at Dogecoin, like at bottom of this bear market winter, and it's just humming along like normal. Like, the network itself is not under any particular threat. And I mean, look at Vertcoin. It's been 51% attacked and like all types of messes and stuff going on with it. It's already a tiny coin as it is in terms of market cap. Like, it's not at zero. I mean, even if there's an inflation bug, that might not even take it to zero because it would still be around, right? It would just be lots of it. And so like it's very, I mean, it has to be some type of massive catastrophic network-wide failure to take it to zero, but it's been operating around for 10 years. And Bitcoin, remember, it's backwardsly compatible. We do soft forks, not hard forks. And so even when new updates get rolled out by Bitcoin Core, a lot of people continue running the old software, as like a safety preventative type problem in case there's a problem in the new software. So that makes the network very, very resilient. So, I mean, been around 10 years. Every day that goes by is another day of confidence that it's going to continue to be around.
That's fair. My only thought was basically in line with what you said, that the worst thing could be quantum computers made by the government figure out how to reverse private keys and take everybody's money. Other than that, I can't really see it, and even so, you could probably offload Bitcoin to somebody in the world willing to buy it. People buy feathers. You could find feathers on the floor and sell it to somebody in Bahamas by putting it around a string. People will buy stuff.
But even if the signet, the private keys aspect, I mean, we could have different signature types like Schnorr, right? So, I mean, even that is like, I mean, Bitcoin is just so resilient. Like, let's say there were a problem with Exter or SHA, like we just rolled different cryptographic primitives in there. I mean, look what we did with libsec 256kp P1. So, I mean, it's a very, like, Bitcoin's just so anti-fragile. It's such a honey badger.
Yeah, I love that. It's true. I mean, we'll just go back to the old software, reorganize it, make perhaps a new kind of algorithm for mining that they don't have control over, might be more resistant, and then keep chugging right along. This is like a virus that refuses to die.
Yeah, well, and hey, like, got to give credit where credit's due. The Bitcoin Cash developer that found the bug in Bitcoin software, the inflation bug. But look how quickly the Bitcoin Core developers got it fixed, and then the patch rolled out and updated with the miners. So
yeah, I thought it was very transparently done as well.
Like, yeah, and then afterwards it was disclosed and everything. And so, I mean, this is just, it's really quite amazing, when you're, we're in totally uncharted territory. We're innovating with new science and new computer science and cryptography and applied financial cryptography, stuff like that. But at the same time, we're doing it in a very, very cautious, conservative way.
Yeah. Okay. Well, I wanted to ask you on another note, dominance for Bitcoin. So you were known as like an uber Bitcoin maximalist, who mostly, yeah. What are you still a Bitcoin maximalist?
Yeah. I mean, I've always like, until you're able to give me a logical, objective argument to the contrary. I mean, I got an open mind. I wouldn't be in Bitcoin if I didn't, right? But like, I mean, I laid out those 7 network effects. If you're gonna like assert it could be something else, like, persuade me, like, bring it, And I just don't see anything else out there on the horizon that could threaten like Bitcoin's network effects and its dominance. And even if there is something and it proves itself being battle hardened in this type of adversarial environment with actual economics at stake, well, if it proves itself, we'll just take the good out of it, strip it out, merge it into Bitcoin Core, leave the stuff that's not helpful, and then we got all the good stuff from whatever that project is. So, I mean, that's how this open source stuff works. Bitcoin's under the MIT license, Bitcoin Core. That means like there are no IP restrictions on that code, and that makes it so much more resilient.
Absolutely. But what we tend to see kind of through history is that basically the dominance drops once the market cap starts going up. So we've seen market cap yesterday, the dominance on Bitcoin was 55%. It's definitely been slowly moving up as we've had a bear market. Do you think that it's possible through repeated bear markets and bull markets that eventually it goes to zero and maybe something else takes its place or whatever? Maybe not zero.
Well, one, I don't think market cap's like the best measure to be looking at or using.
Yes. I wanted to ask you about that. Why do people say market cap is not the right measurement? I would love for you to explain that.
Well, I mean, like you could look at Ripple XRP. They sell a bunch of it, but then they have lockup agreements, so people can't actually move that on the market. And then the vast majority of it's been being held in Ripple Labs's treasury account, and then they pay $60 million to have market makers make a bid on there. Well, that can inflate the market cap because there isn't very much float. Like Bitcoin, sure, some of the Bitcoins might be lost, but at the end of the day, there are no restrictions on any of the Bitcoin. And once they get issued out of a Coinbase reward, like they're out in the world to be spent, right? And so I like to look at instead of looking solely at market cap, I like to look at buy support. Like how much buy support is there on exchanges and OTC? And Bitcoin right now, looking at coinmarketbook.cc, Bitcoin's got $189 million of buy support, and Bitcoin Cash has $1.4 million of buy support.
Wow. That's an interesting metric.
Yeah. And so it's like, if I were to, if a hodler of last resort was like, how many dollars could I get out of my position with, if I dumped all of it on the market right now, like how much buy support is there to buy it? And, so I like looking at that a little bit more, because that shows what people are actually betting with their money, like in real time. What are the orders on the order book that you could hit? So, I like looking at that instead. And then also like daily liquidity and daily volume. I mean, Bitcoin's like $5 billion a day, and probably another 12 to 15 billion on OTC markets. So that's a very deep capital market. If Bitmain wants to sell 100,000 out of their million plus B caches, like who's going to buy those at current market prices? Like, good luck with that.
Yeah, you definitely need that support. I did want to. I was researching a little bit about Ripple and the amount of Ripple in circulation and what's on CoinMarketCap and the price, and definitely if there was some locked up, that might play a factor into the price. But I did hear that they're only calculating what's actually circulating and not what's in escrow for Ripple, so it might be fair, but I actually don't consider Ripple an actual, public cryptocurrency. It can be used as that, but at the end of the day, I kind of see it like Ripple, the company, is offering a security here, and I don't know. It just doesn't seem. I don't really care if it's number two. You know what I mean?
Well, yeah, and it definitely, security issue, and maybe they should be an administrator under FinCEN guidelines, because they can freeze like any balances on there and stuff like that. I mean, just because it's a token with like a trading symbol on some altcoin exchange does not mean that they're all equal. Like, these are all different things. And we're seeing with the SEC and the ICOs, like, you want to clearly be a commodity if you want to be, regulated under CFTC. If it's clouded, like, that starts impeding exchanges being able to list it, because then they're listing unlicensed, unregistered securities, etc. So, it's a very interesting space that we're in, assuming they even have the keys to the tokens that they claim they have that they're listing.
Sure. So I wanted to ask you, some people are very interested. Ken Bozak, shout out to Ken, wants to know your thoughts on stablecoins and what role they play in the big picture for the long term. I mean, and I did want to get your history on Tether. You were here early on. Did you ever get approached to be an investor in Tether? What was your response to that? And what role, maybe even diminishing role, do you think it plays into the future?
Oh yeah, so Tether, that's an interesting one. So I actually interviewed Reeve Collins, who was one of the founders of Tether, before Tether launched. And I previous to Bitcoin even coming out, I was an investor in goldmoney.com, and they vaulted $2.5 billion of physical gold. They put it on the pallet. They got audited every quarter, trying to do a digital currency thing. So I've been in this space for a while. And my idea to Reeve was, instead of adding a layer of risk with bank accounts, why don't you take the physical bills and vault them? Because they all got serial numbers, and then you could audit them all and everything. And his response was very interesting, that they wanted to be able to earn the interest on all these deposits that are in the bank, because they're not paying the interest to the Tether holders. And would rather have the Tether holders have that risk, as opposed to just vaulting the actual physical bills, right? And there seems to be demand to vault the physical bills because there's a big pension fund that wanted to vault 10 million Swiss francs because of the negative interest rates, and the Swiss National Bank wouldn't give them the 10 million francs out of their account. so they're learning, like, they wanted proof of keys by taking possession of the Swiss francs, and the Swiss National Bank said, no, you can't have them.
That's what I'm a fan of DAI in a way, man. Why tether yourself to a failing fiat currency held in banks that, you know, control the money and manipulate things in so many different ways? Obviously, we can get into,
and can be leaned on by regulators. The bank account could get frozen or seized. The tether holders themselves have like no claim on them, and
isn't this about sovereignty at the end of the day, holding your money, right?
Well, yeah. I mean, I guess it just shows just how bad dollars are in bank accounts, right? That, like, there's enough demand for $2.5 billion of tethers or Paxos or like USD Circle or whatever. But I mean, I think these stable coins, I think they're going to continue to grow because they add functionality and usefulness. You can transfer value among exchanges and online a lot faster. Because, I mean, the current banking system is so bad. Like, it's horrible. And, you know, these are a little bit better than that and a little bit faster. And so, you know, but that's what we're seeing. We're going to see lots of innovation and stuff. And, you know, and Ken, like, I'd love to do a show with you, but I'm traveling to DC and New York like this coming week. So I just like have no time in the schedule, like last minute with crypto here. So, anyways, that's kind of my thoughts on Tether, is like, why hold those things? And I guess maybe it's like a bunch of shady Chinese exchanges, like, they can't get bank accounts. Like, they use Tether for the other side of the pair, right? And the Chinese or people in these countries, they can't get US dollar bank accounts, but they want to have their capital stored in dollars because it's better than yuan or Venezuelan bolivars or whatever. So, you know, there's definitely like demand out there for it. It's just, I don't know that it's like, I wouldn't keep any of my money in it.
So, yeah, and I'm sure there are privacy issues because it's easier to track you depending where you send, like USD Circle. You've just tainted that Ethereum address. You have to be cautious, right? So what do you do? What do you do to protect your privacy? Is there like specific software you do, or kind of you know, routines you carry out when moving cryptos around? What role does privacy play in your life?
Well, I mean, I'm a hodler of last resort. I don't really trade much at all. Like, not really at all. I've started trading on Ledger X, and then, you know, and Ledger X, the bank account that your dollars are held in, I actually went and got a bank account at that same bank, and so it's just an intra account transfer at the same bank. And, you know, and then from that bank account, I can move it to other ones to pay taxes or whatever, you know, because I'm going to pay taxes when I have gains on these options that expire worthless. You know, so that's at least kind of how I play it. Otherwise, I mean, I don't buy coffee with Bitcoin, and I don't want to have like all those transactions to have to do tax paperwork on, you know. So, I mean, I just don't really engage with the Bitcoin network in that type of a way. I mean, I definitely understand people who would, and would want to, but, you know, they might not have the same type of reporting requirements like I do. You know, like Roger Ver, he gave up his U.S. citizenship, and so he doesn't have to report all these things anymore, you know, which is like all the power to him.
Yeah, we heard about that yesterday. Some legislator, Takahashi Fujimaki in Japan, who's proposing 4 amendments to take out the sales tax when using crypto, inter-crypto tax. You know, you'll be able to carry on your losses. That's insane, man. It almost makes me want to pull a Roger Ver here. So good for him.
Well, yeah, and there's rumblings here, you know, like Wyoming, and there was a U.S. senator that wanted like a de minimis exemption for crypto on IRS and stuff like that. So, I mean, maybe we'll get there. Who knows? And I mean, I don't really have any reason to use like mixers or stuff like that. So, like, I'm just not fluent in that type of stuff. And who knows, like Grin and Mimblewimble could be coming down the pipeline. Lightning Network with its onion routing inside of it. Chaumian eCash servers on top of Lightning Network. I mean, we got a lot of I mean, I think I do agree. We definitely need fungibility and anonymity type solutions baked in at the protocol level as soon as we can safely do so. But writing that type of code and making sure that it's safe and secure with formal mathematical proofs on some of the important areas might be easier said than done.
Yeah, and getting consensus on a hard fork might be easier said than done.
Yeah, exactly.
So, and I'm glad you talked about Mimblewimble because old crypto geek wanted to know your thoughts on it. I don't know if you want to expand a little bit more about that and possibility of integrating it into Bitcoin. What that is.
Yeah, I mean, it's definitely an R&D, and I really like Andrew Palestra's work. I mean, we're running out of time. I got another interview here in a couple minutes, but
we'll wrap up right now.
But I mean, Grin and Mimblewimble, like they look really cool, and I think that side chains, by being able to move Bitcoins over into them, we can then develop on those side chains, and then that actually might become like the new Bitcoin network, right? After it's proven itself safe and secure, because then more Bitcoins can migrate into it, and the old Bitcoin network can kind of fade away, because we got the new Bitcoins in over there. So, I kind of see it as potentially like a way for the Bitcoin development process to happen in a very safe, secure, like firewall type of way.
Yeah, building it alongside. Well, Trace, I just want to thank you again, man. You're the best voice. I mean, every time we come on, we could obviously chat for many hours. Your brain is filled with stuff, and thank you so much for taking the time. On a short notice to come out in between all your trips. And I hope you have a safe trip to Washington D.C., New York, and is it New York?
Yeah, New York City, like into the snow. Oh, this ought to be fun, right?
Yeah, man, for sure. And everybody else who made it out, thank you so much. Sorry if we didn't get to some of your questions, but hopefully we can get Trace on again, in a few months later on down the road to see where we're at that point. But I think we got some great nuggets as usual from you, Trace, and I hope you have a great interview as well coming up next.
Yeah, so want to invite everybody, like, join us on the battlefield to declare your monetary sovereignty. Proofofkeys.com, January 3rd. Every year. Like, I think it'll just be the coolest like crypto tradition for us to start.
Absolutely. We should do a biannual afterwards. Anyways, take care, everybody. Thank you for making it out, and stay cryptic. Peace.
Be sure to get a copy of the free Bitcoin guide at freebitcoinguide.com. Got a question or suggestion? Record your voice at bitcoin.kn. Don't be shy. To help the show, share bitcoin.kn with friends, post about it on Reddit, and otherwise spam the interwebs. Your iTunes comments and 5-star reviews are very important to us. Please continue tuning in to the Bitcoin Knowledge Podcast, where we release interviews with the top people in the Bitcoin world. Now take some choline and let that Bitcoin knowledge consolidate.